Sounds like both of you agree that China is going to do more stimulus. I think they're late. I think they should have started 5 or 6 months ago, but
Yes.
better now than never, right? Um, so it sounds to me like you believe that there will be the beginning of a taper, maybe a small beginning of a taper late this year. Is that fair to say?
Yeah.
Sam?
I think
Uh,
it's fair to say that there will be some form of taper.
okay,
I don't know, even if it's just rhetoric as we
right.
move into 2022, at least with what we know right now. I don't think they should, but what I think
Right.
they should do and what they're likely to do are two wildly different things.
So even if it's say 10 billion a month, which is nothing compared to the entire um, kind of stimulus, monetary stimulus they're doing right now, that would have a dramatic sentimental change. Is that your view?
Yes. So it's all about that incremental change in sentiment. It's not about the incremental change in the addition to the portfolio.
Right. Marco, are you the same? Do you think there's a change in sentiment at the Fed and there's going to be a move toward tapering late in the year?
I mean, I think tapering happened in June at the FOMC meeting.
Hmm.
And
How
so
so?
that's, yeah, well, I mean, because that's when the Fed incrementally turned hawkish. The DXY jumped quite significantly after the meeting. So I think that the risk in your view, is that a lot of the things that we're talking about right now have been slowly priced in over a period of time. And while oil prices and S&P 500 haven't really corrected to this new reality, so S&P 500 is reaching new highs, except for the last 2 days. Oil prices have started to come down finally, but the 10-year has actually been pretty stable through the last couple of weeks worth of volatility. And that tells me a couple of things. I think the bond market priced a lot of the things we're talking about already. The second issue is that fiscal policy is really tricky when we talk about it. And here's what I mean. 1953, we had a fiscal cliff recession after the Korean War. But that's because the fiscal cliff was very clean, very simple. We spent a lot of money on bullet casings and tanks and airplanes during the Korean War. And then that fiscal spend stayed on the Korean Peninsula. We couldn't take it back with us in 1953. In other words, we got a fiscal cliff recession. This time around, the 1.9 trillion, fiscal stimulus we had earlier this year, that actually, in accrual mathematical terms, shows up as a huge fiscal cliff next year. But that actually lives on household balance sheets. And so that's where I would say that, let's see how the Delta variant issue resolves itself. Because in 1 month, here's what I know. I know the savings rate in the United States, the personal saving rate is still elevated at 9.6%. I know that revolving credit is going through the roof, and that households are re-leveraging themselves in a way that they haven't for 10 years. The US consumer is acting in the ways they acted in the 90s and 2000s. If you look at household debt as percent of GDP, you have this long period of deleveraging for the past 10 years, and now it's coming back up. And so to me, that's where I think the fiscal cliff of next year is overstated. And the reason that even a 10-year fiscal package matters is because you're talking about a 10-year bond. And if I'm going to hold a 10-year bond, that on the back end of that 10-year, there is Trump tax cut level of unnecessary fiscal stimulus. Let me say that again. What this fiscal spend right now, it's going to produce a similar pro-cyclical fiscal thrust that we had during the Trump administrations in the last 2 years through tax cuts, this time through infrastructure spending. That's going to create a modest fiscal thrust, positive fiscal thrust for the duration of the asset you're holding. And I think that the market will still have to respond to that, even though next year there's no way to avoid mathematical fiscal cliff.
Right. Interesting. So all of these things together, just going back to the reason I initially contacted you guys, I was hearing companies telling me that their Q3 revenues were really they were downgrading them, and they're really worried about their performance in Q3. And I think we've seen that, or I've seen it anecdotally. We saw tourism not necessarily be what we thought it would be. We've seen a lot of things happen that we didn't really think would happen over the summer, or not happen that we thought would happen. So how are you seeing these policies, or how do you expect these policies to manifest at the company level? And when do you expect them to help companies to move forward?
Well, I don't think any policies will help companies. I think what will help companies is once COVID cases go down and people kind of stop being afraid of the Delta wave. Right now, if you look at hotel stocks are back to like November 20th level. Like they're back to pre-Pfizer result levels. And I think that that's a great investment opportunity. I would be long COVID plays right now because the data from Israel, the data from Iceland, the data from a lot of different places that are almost fully vaccinated are pretty clear, which is that vaccinated people can absolutely get COVID. And very few of them have adverse effects. I mean, the efficiency is actually at very high levels. The media is misinterpreting the data. And once you account for age disparities and so on, like the efficiency here is like in the 90s. So
it's amazing. Yeah.
Yeah, I mean, look, I mean, it's a simple fact. Now, that's going to take some time, as Sam said. I think that's going to be articulated in the data for the next month. But I think that you have a great entry point into the COVID place right now. And I don't think that any of the policies we're really talking about are going to have much of an effect on earnings over the next quarter.
Marco, I'll give you a data point that I was looking at earlier today. Texas right now has the same number of cases that it had in Feb of 21. Okay. But the daily fatalities are 60% lower than they were in Feb. Okay. So, the case counts are just as high, but the fatalities are dramatically lower. And that's good news, right?
Look, Tony, I would study really the case of Israel, because if you study the overall numbers in Israel, you come up with a figure. I think it's 68% effectiveness for Pfizer, which is lower than advertising. But that's actually a mathematical concept called the Simpson's paradox.
Yeah.
And what's happening is that we need to segregate the different age cohorts, not just average them together.
That's right.
Because the elderly tend to be more vaccinated. So
Yep.
you have a larger pool of older people who tend to have received the vaccine. They also tend to go to a hospital more often with a respiratory disease, even though they're vaccinated. So you can't just average everyone together. The actual vaccine efficacy is in the 90s for all cohorts, except in the 80s for some of the much older, over 80. It's like about 80% effective.
Right.
And so, yeah, I think a lot of this is, what I compare COVID to, and I think Sam will appreciate this. I compare it to the Euro area crisis.
Yeah.
Like you could have made a call in 2010 that this thing was over. Like once Germany bit the bullet and bailed out Greece the first time, like it was over, guys. But every time a new country showed up, it was like, whoa, here comes Portugal. Oh my God, the world's gonna end. And it's like similarly with COVID, like we know where we're headed. Like every wave is going to cause sentiment issues and so on, but I would just bet against those.
That's a good call. I like that. I like the optimism there, and I like the perspective there. I think that's really interesting. Sam, what do you think?
I think there's a combination of two things. One, I think Marco is 100% right that this is an awful lot like the Euro area crisis, right? You can, every single time, right? Greece was the first big bang. Then you had the ripple effect to Portugal. Then it was Spain. And everybody was wondering what the next shoe to fall was. And you had the correction of 2011. That was fun. you had these longer term kind of ripples. I think there's going to continue to be ripples this time around. And the question is, in my mind, it's really difficult to predict what people's sentiment around those ripples are going to be, right? I think we can look through them for the next, call it 5 to 10 years, and say it's all going to be fine. This is the way it's going to play out. The real question is, how does the, call it the American consumer mindset, how does that actually grasp this ripple as
Right.
we move through it? And how does China react? How does Europe react? Right. There's a number of factors that play in here that I think are really difficult and maybe not as priced in as they should be. Right. And to Marco's point, I think this is a really long term, very strange kind of predicament that we're in, where vaccines are really good. They work really, really well. How do people's minds begin to grasp it, and do they begin to look through? Do we get higher vaccine rates? Do we really power through this in a meaningful way very, very quickly, or does it continue to be highly volatile on the consumer sentiment front? Because if consumer sentiment continues to fall, it's going to be a big problem for the back half of this year. And that, I mean, to kind of
We're
backing
already
up
there in the
Marco's,
back half of the year, right? I mean,
well,
that's the
yeah,
worry. Like, this is a
well,
terrible time for consumer sentiment to fall because we're at the precipice of kind of holiday season buying. Not quite there yet, but if it stays for 2 more months, it gets
yeah,
pretty bad.
it does get pretty bad. But I think this is also one of those points that I think could really be a tailwind to Marco's earlier comments about fiscal stimulus and fiscal stimulus being higher than anticipated. You continue to have consumer sentiment fall. You continue to have people fearful of Delta. You have a couple of bad job prints,
Right.
and all of a sudden you're going to have much higher fiscal spend. You're going to have a very dovish Fed, right? I
Right.
think that's the risk to the market, call it the market. That's the risk to kind of my side of Marco and I's bet, is if all of a sudden this fear actually really ingrains itself within individuals, it's going to be a huge, huge issue as we move into the Christmas buying season for companies, Christmas buying season for consumers. And you're going to get big checks written out of Washington, regardless of the geopolitical situation, regardless of whether or not, people want to say Biden might be a, lame duck because of Afghanistan, et cetera. All of a sudden, you're going to have a Fed that's very concerned, thinking it was a, call it, ripping economy with incredible inflation that wasn't going anywhere. You're going to have them reverse very, very quickly. You're going to have senators on both sides of the aisle very concerned that they might get blamed for a recession. It's going to be a really interesting
It
Q4.
is.
But that's why it's a dynamic environment, right?
Yeah,
And what I would say is like, look, I have certainty on the Delta wave. Certainty.
Yeah.
Every wave we've had has crested, other than in emerging markets because their testing is poor. So it's actually a mega wave that we constantly think is over, but it isn't. In the US, we know how this story plays out. We know it. It's a 4 to 6 week wave. The challenge here, Tony, is that we're talking in the middle of this wave. We have probably another 2 to 3 weeks of upswing, and then we're going to have a downswing in cases. And by the way, I know this with like 100% certainty, because we had waves collapse even before we had vaccines. So this is a really important point, because if the Fed reacts to something that is extremely impermanent, something that's over in 3 weeks, if the Fed at Jackson Hole and subsequently in September wavers, I mean, that will just set, I think, the market alight, in my view. I think that will collapse the dollar and that will sell the bond, because it will have been using this, temporary blip in sentiment to justify a change in course. The other thing I would say is, like, so Sam mentioned Afghanistan. I think he's right to mention. I think it's really significant, and it's significant because of this. I think I've always expected that during the summer, the fiscal policy would get much more challenging. And now because of Republicans, I think moderate Democrats in the Senate versus progressive Democrats in the House were always going to try to eat each other alive. But now, with this utter failure in Afghanistan that looks really, really bad, they are going to circle the wagons on fiscal policy because the last remaining lever of the Biden administration is this fiscal package. If they don't get it through, guys, the Biden administration is done. And I mean, I'm talking about midterms either. So they have to do something on fiscal, right? Like, so this is why the stakes have now become much higher. They're going to pay Manchin, they're going to pay Sinema, they're going to get deep water ports in Arizona and West Virginia to get their compliance with the fiscal deal. You know what I mean? Like, there's going to be so much pork. I wish I was living in West Virginia. I mean, they're going to have ice rinks in every little town. It's going to be amazing.
Right.
And so this is something to keep in mind, I think, on that front too. So I agree with Sam. I think that's a really, really good point of how these things are very dynamic and they reinforce each other. And I just think that the political pact of least resistance in every single issue we're talking about here leads to more profligacy.
Yeah, I think you're right. I think at least for the near term, that's the bias is exactly in that direction. So, okay, guys, thank you so much. I think we could go on for hours with this, and I love this discussion, but I really appreciate your time. For everyone who's watching, please subscribe to our YouTube channel. We need a few more subscribers to bring you a few more capabilities on our channel. So if you don't mind, please subscribe. And Sam and Marco, really appreciate your time. Thanks very much.
Thank you. Thank you, Tony.
Let's do it again. And I want to come back in January and see who wins.
Yeah, for sure. We should definitely do that. We didn't tell people what we bet into, but it's like a really nice steak dinner, I think, was the.
Yeah.
And by the way, if the 10-year is at like between 1.49 and 1.51, I think we just